Do we have any? Oh, wait. Oh, okay.
And this is Peter Town, the host. We will get started at the top of the hour in about a minute. Thank you for joining us. Hello, everyone, and welcome to SCORE Fairfield County's webinar on business survival skills for an uncertain economy, practical strategies. I'm Peter Talion, the webinar coordinator and a business mentor here at SCORE Fairfield County, and I'll be your host today. Our speaker today is Joe McCaffrey. More on our speaker in just a moment. First, I will ask Diana Washington from the Black Chamber of Commerce to do a welcome as one of our webinar partners. Diana, please go ahead.
Good morning, everyone. I want to thank you so much on behalf of the Chamber for joining us on what I'm sure is going to be a very interesting webinar. But a little bit about the Chamber and our other sponsor, the Bridgeport OIC and BizHub. The Chamber is a membership business organization serving small businesses in Fairfield County and beyond. We provide advocacy, networking opportunities, educational and informational workshops, along with free access to contract bids, MBE certification, and business-to-business perks. Our goal is to create a level playing field by making sure that our businesses are aware of the resources and services that are available to them to either start their business or move their business to the next level. And a little bit about the Bridgeport OIC and BizHub, which this organization has been unlocking the doors of opportunities in Greater Bridgeport and the surrounding towns for over 20 years. They play a vital role in the struggle for economic justice and provide free job placements, skills development services, along with ServSafe certification, small business development, and urban farming training. Led by Deborah Cavanis, President and OIC and CEO. OIC prepares and empowers our adults for today's workforce, the changing economy, and environmental challenges. And I am going to be putting our contact information for both organizations in the chat section in case you'd like to know a little bit more about either one of the organizations. Thank you, Peter.
Thank you, Diana, very much for your comments and, of course, for the ongoing sponsorship of both the Black Chamber and the Bridgeport OIC. They are regular sponsors of our webinars, and it's very much appreciated. Let me talk briefly about some information on SCORE. There are about 230 SCORE offices nationwide with 10,000 plus volunteers nationally. SCORE is an SBA resource partner, Small Business Administration resource partner. In Fairfield County, we have about 100 volunteers with a wide range of industry, process, and subject matter expertise. We offer 3 primary value-added services to small business owners. Free one-on-one counseling, face-to-face, by phone, video, which can be accessed via the Request Mentor link on our website or via the link on the screen. In-person educational workshops and live webinars, about 100 per year. And very, very extensive resources on our website, including a network of subject matter experts at your disposal, prior webinars, templates, and documents that will help you to start and grow your business. Some information about today's event. If you have a question, please use the Q&A function at the bottom of your screen anytime during the presentation. We will take questions at the end. We will save time at the end to take your questions, and we'll get to as many as we can. Our workshop will end at 1 p.m. to respect your time. The session is being recorded, and the link to the recording will be available at fairfieldcounty.score.org within the next couple of days. Now, it's my great pleasure to introduce Joe McCaffrey, a business advisor and mentor that I've worked with for many years. He is a business advisor with Community Investment Corporation, CIC, which is a not-for-profit economic development lender licensed by the SBA to administer their lending programs. In addition to advising clients on how to optimize their business, Joe is the co-host of Strategic Business Intelligence, CIC's monthly podcast that examines the news headlines to address the all-important question of what does this mean for small businesses? Joe is a qualified, certified business mentor, subject matter expert in commercial real estate, small business strategic planning, financial management, and capital sources with Fairfield County SCORE. Joe has done many, many presentations in person every year, and we welcome him back to the webinar format. I turn it over to you, Joe. Please go ahead.
Thanks, Peter, and thanks, Diana. So yeah, it's been a while since I've done a webinar. I mostly do in-person workshops, so it's kind of fun to get back online. So I'm going to start off with just giving you an outline of what we're going to cover today. So if you were on the call about 10 minutes ago, Diana and I and Peter were talking. I received a call about a month or so ago from Diana Washington at the Bridgeport Black Chamber, asking me to do a webinar on survival skills for small businesses in an uncertain economy. And I've known Diana for a number of years. I've done a bunch of workshops for her before. She's one of the nicest people I know, and she's someone who you just can't say no to. At least I can't. So when she asked me to do it, I was like, definitely, I'll do it. So I asked Diana, so, what do you want me to cover? And she sent me a list of topics, which is what you saw in the invitation email. So I'm going to present exactly what was advertised in that. And we're going to start off with just an overview of where things currently stand. There's a lot of stuff going on, and even today, the government might shut down later today. There's a whole bunch of stuff going on, and then I'm going to speak about what Diana requested that I cover, which includes we're going to talk about change. There's a lot of change that's been going on, and a lot of change that's going to continue to go on for the foreseeable future. So we're going to dive into that. As entrepreneurs are unique people because, they're very comfortable with change. You live in a world of constant change. So, none of this shouldn't be too out of the ordinary. I mean, some of it is more extreme than what you might be used to, but, we're always dealing with change, right? There's a lot going on in the international trade arena right now. So we're going to dive into that a bit more. And I've got a whole bunch of ideas for you to help you protect your downside. These are actionable ideas that I put together. The list, I think, is up to like 94. I can't go through 94 ideas with you today. We'd be here all day. So what I'm going to do is I'm going to pull out like 10 of them maybe that I'm going to go through with you. And then the rest of them, as a bonus for those of you who've tuned into the webinar today, live, we're going to email you that list of 94 ideas for mitigating your downside risk. So hopefully you'll find some helpful ideas in that list that you haven't yet thought of. So that's your bonus for we appreciate you tuning in live. For the people who didn't tune in live, I don't know, maybe they'll get it, maybe they won't. They'll have to ask me nicely. Okay, so then we'll talk about some what if, future scenario planning. And then we'll finish up with talking about controllable versus uncontrollable factors. So that's kind of what we're going to go through here in the next. I'm gonna try to leave like 10 minutes at the end for questions. So let's start off with the current state. So I speak with a lot of small business owners as part of the work that I do at CIC as well as with SCORE. And back in early 2024, if you remember back during that time, the economy was kind of limping along, and clients we were talking. About, well, when is things going to pick up? And everybody was expecting an economic turnaround sometime in like, say, sometime that spring when the weather changed. Everybody's like, oh, it must be the weather. But, I'll tell you what, the late spring ended, the weather got nice, and it didn't materialize. Things didn't really change. And so I started talking with my clients. I said, well, what do you think's going on? If it wasn't the weather, like, what is it? And you can imagine I got many different answers. And what I realized was that there wasn't one, two, or even three reasons why, things hadn't materialized. There were as many as 20 different reasons, although, probably to varying degrees. But, based on all the things that people were seeing in the news, hearing on, reading the newspapers online and whatever. So I started collecting news headlines, and the picture started to become more clear to me. And, I decided that I wanted to share my findings. So I launched a monthly podcast. Here's the link for it. And I'm going to have it at the end of the presentation. So don't worry, don't click on it now, because then you'll lose the video. So along with the CEO of CIC, Louis Silva, he and I, we do a monthly podcast. We talk about, what we see in the media and how it affects spending behaviors for small businesses. And, so I've got, I don't know, maybe like, maybe 300 articles a month or whatever that we collect. I started collecting this data back in July of 2024. So I've got about 5 quarters of data right now. And that's 3,145 news articles. That's a lot of news articles. And again, they're in 20 different categories. And so what I do is I can't possibly, I mean, in any given month, I probably have, maybe 300 articles each month to analyze. And that's a lot. I mean, you can't really mentally process that. At least I can't. So in addition to my own analysis that I do read through all of them, right? I put all the articles into ChatGPT and I ask it to tell me what story it sees. And it's a really, really interesting analysis. If you want to go check it out, it's on our website. And again, I'm going to give you the address for that later. So we get, we're part of we're a nonprofit, as Peter mentioned, and we get grants from the SBA. So we do this podcast as part of our education mission, and we make the ChatGPT report available to the public for free on our website. So, at SCORE, we don't like to promote businesses and stuff like that, but I can promote this because I don't get paid anything to do it. Other than I get paid a paycheck, but anyway. Okay, so now because the media is biased, it can be biased. That's one of the criticisms of the media, and my perception of the articles is subjective. I'm generally not too concerned about positive, negative split, and what I look for is changes in the data that can indicate a potential emerging trend. And again, the premise of this whole podcast is, the media that we consume as consumers, as customers, it affects what we do. It affects our feelings about things, and ultimately it affects our spending behavior. So this was interesting. So if you look at all the articles that I've collected to date, 68% of them are negative and 32% are positive. Now, I started this because I want you to remember these two numbers, because we're going to refer back to this in a couple of minutes. But for now, just remember that. We're going to move on for now. But again, what I'm looking for is a trend line. Are things getting better or are they getting worse? Now, there was only, maybe one, there was one category, which is the investment category, that has barely been positive. And I mean, just barely. And 47% of the articles were positive. Now, you might say, well, it's less than a 50% majority. How can it be positive? Well, and the reason is because the articles are weighted. They're not all assigned the same weight. So that's the reason why you're seeing, the 47% number. The other categories, the worst ones, that's what everybody wants. Well, what are the worst ones? Health, politics, and geopolitical tension. Is there any surprise at this? There shouldn't be, right? Health is still, listen, COVID's still out there. We got, mosquito-borne illnesses. We got Tylenol problems, all these things, right? These are all the things that we hear about in the news, and it shapes the way we feel about things, right? Overall, I would say the news picture right now is not very good. I'm not telling you anything you don't already know. Many of the articles are about what's already happened. That's the important thing to remember here. We're looking at what's happened, yesterday, right? But many are also forward-looking. Like a lot of the perspectives in the articles are like when we talk about interest rates. Oh, the interest rates are expected to go down soon. Okay, well that's forward-looking, and we would consider that to be a positive on a going forward basis. But I think it's fair to say that the expectations are unfavorable for the economy right now, and including the small business environment, which is why we're doing this webinar. There are things that you can do, however, to prepare your business if those expectations materialize, and that's ultimately what we're here to talk about today. So now you're probably wondering, well, what are those 20 categories? Here they are. Okay, these are the news categories that I track, and each of these has the potential, in my opinion, impact consumer sentiments and ultimately consumer behavior. They're not all the same. I understand some are more important than others, but particularly for small businesses, this is what it's all about. And again, I publish an AI generated analysis each month of all these articles and that I review in each of the categories. So, some categories may be more applicable to your business than others. If so, you can just read those. Go on there and just check out those. And again, I'm going to share the podcast and the link and to the podcast and the analysis with you at the end of the presentation. Okay, so here's what the picture looks like. I want to give you a picture. This is what the numbers look like. So just for reference, the calendar year of 2025 started at data point 761. I don't know if you can see my pointer on the screen or not, but that's somewhere like around here. All right. Now you can see what's happened since the beginning of this year. You can see the negative trend has gone up. And when back at the beginning of the calendar year, the negative news was 57% and the positive was 43. What were those two numbers I told you to remember before? 68% negative is where we presently are, and that's on a cumulative basis, and 32% positive. Okay. So suffice it to say, a lot has changed since the beginning of this year, right? But that's a really big drop, a really big change over a relatively short period of time. So again, we're experiencing a lot of changes. So let's talk about change. What is change look like right now? If you read any newspaper, you'll learn what changed since yesterday. That's what a newspaper shows you. This is what happened the day in the day before yesterday, and it's a report on all this, right? The business environment changes every day, even if it's only just a little. But over time, and sometimes it's not much time, those small changes can turn into major shifts. And again, we've been through some major changes over the last decade or so. Think about all the companies that had to pivot when we had COVID, which was like 5.5 years ago, the financial crisis back in 2007, 2008. We get dealt these curveballs, to us once in a while, and it's just part of just life and being in business. But look, here's the reality. I remember back during when COVID hit, I was doing a webinar with one of our members of Congress, and I said, look, change always brings about, disruption, and disruption can have one of two outcomes. There can either create opportunities or challenges, and sometimes it's both. But the difference is that entrepreneurs, they focus on the opportunity more so than the challenges. They recognize the challenges, but they don't get like focused on that. It's like, oh, I can't do this because things are bad right now. They're like, okay, maybe I can't do that, but what else can I do? They start thinking creatively, and that's really where the innovation and I know a number of businesses that changed dramatically in the early days of COVID, and their business is on a completely different platform today. And so that's kind of the point that I wanted to make here. So what worked for your business yesterday may no longer work today or even tomorrow. So pivoting is something that you don't pivot only when things get really bad. It might be too late by then, or what you need to do to pivot might be just too big of an undertaking to make it happen. So each day look for new ways to improve your business. And that's really what we're trying to get you thinking about today. So adopt a mindset of continuous improvement. You've heard that term, I'm sure. That's ultimately what it is that we want you to do. So, sometimes you may not have certainty of what's going to work or not. So just experiment. This is where, flexibility, comes into play. Think ahead, plan for stuff, right? Run ideas by your key stakeholders, right? This is, pay attention to what's going on in your ecosystem. Listen to what your customers, your employees, you've heard the saying, innovate or die, right? It's very true. It applies to both large and small companies, but large companies have the resources to withstand a delayed response, right? Small businesses, unfortunately, do not have that luxury. So, you really have to, like I said, listen and respond to things as you hear them. The one thing I try to say to people is, don't try to predict the future because you can't. If you try to predict the future, you're always going to be wrong. Nobody can predict the future. But what you can do is have a plan, a flexible plan to hopefully change it to be the future that you want it to be. And, I know I sound like a SCORE guy saying, oh, you should have a business plan, but you should have a business plan. Okay. So anyway, that's all I'm going to say on that for now. Let's move on to the next topic, which is trade. Okay, as you can imagine, trade has been a very popular news category. It's number 10 out of 20. I thought it would be higher than that, but it's not. Okay, so what's the problem with trade? Why is this such a big deal right now? Well, I'll tell you. We live in a global economy where we buy and sell things all over the world. Okay, think about most of the stuff that you buy. Where's it from? Most of it is probably from China, right? Okay, so our president has been seeking to renegotiate deals with all of our trading partners, and that's got a lot of people on edge right now. So of the articles that I collected, there's some 3,143, I forget the number, 343 of them are pertain to trade and tariffs, and 74% of them are negative. That's a pretty big number, okay? So the US has what's called a balance of trade imbalance. And what I mean by that is, the US produces about 17% of what the world consumes, but we consume about 25% of what the world produces. Okay. In other words, we're the world's biggest customer. And as the world's biggest customer, that gives the United States some negotiating leverage with our trading partners. But the question is, how much leverage do we really have? Do your customers tell you how to run your business or how much you're going to charge for your products or services? They might try, but at some point you're going to push back. And that's exactly what we're seeing right now from a lot of our trading partners. And I get what the president's trying to do. President Trump is trying to level the playing field to correct years of imbalance, but he's doing it on a very accelerated schedule. And as I said before, we're talking about change. Change isn't something that most people like. Would you agree? I mean, again, a lot of entrepreneurs don't like it either, but they're more used to it, especially when it's forced and fast tracked. And this is what's created the current trade disruption. So let's talk about tariffs. What exactly is a tariff? A tariff is essentially an additional tax. It's a government levy paid by whomever is importing the goods that are coming into the country. And rates vary, based on the product type that's being imported and the country that it came from. We hear about those stories all the time. But here's the thing. So the person importing the goods, they can take that tariff and either absorb it or pass it down the supply chain, ultimately ending up with the consumer. And even if a small business, this is an interesting point. I was talking to somebody recently, like, well, we don't import anything. Well, that's great. But even if you don't directly import anything, what you buy for your business, even if you buy it domestically, it probably originated from outside the United States. So ultimately, there's going to be a tariff potentially baked into the price of what it is that you're paying, right? So just keep that in mind. So again, going back to what's going on right now, President Trump is using tariffs as a punitive incentive. In the economic world, we call this, the stick versus the carrot. The carrot is the incentive. The stick is the punishment if you don't do what needs to be done. And that's what he's doing here. He wants to get American companies to produce domestically. And but look, here's the reality. Offshoring all the stuff that we used to produce here, you go back 50 years ago, whatever, all the stuff that we used to make here that moved overseas, that's happened over many decades. And it's reversing it is probably going to take at least as long, in my opinion. It's not something that we can just, flip a switch and say, oh, we're going to just make everything here now. We don't have the factory set up. We don't have the people. I mean, it's going to take a long time to make that happen, in my opinion. Here's another thing to consider. Tariffs contribute to inflation, and inflation makes consumers more cautious. Sales go down, forcing big companies, they start cutting staff. People who lose their job or think that they might lose their job, they spend less money. Let's be honest, right? Particularly at small businesses. Why? Because small businesses tend to offer more discretionary products and services. And as such, they realize more softness in sales when the economy contracts and consumer spending tightens, which is what we're starting to see. I'm starting to see this with a lot of my clients right now. And the more discretionary that your product service is, the more likely you're going to realize a slowdown sooner, and it'll likely be more extreme. Okay, so keep that in mind. That's why you need to prioritize and be proactive about protecting your downside risks. And that slide's coming up in just a second. One other point I want to make on this, again, I read the news every day. I collect articles. What I'm seeing is that international trade volume and logistics are showing contraction. There's less stuff being made in places like China that's coming here. The boats that are coming here don't have as much stuff on them. There's the trucks around here. There's not as much movement. We're seeing these. The news is reporting on these things. So we're starting to see this. Are you seeing it? Do you see it in stores yet? Have you been shopping lately? Maybe you don't see it in like grocery stores or, but have you noticed like how much Halloween decorations are out there? Have you seen a lot of those? We've got the upcoming holiday season here just upon us, right? What's that likely to look like? It might be a little lighter under the tree this year for some folks if all these news reports are accurate and we're not seeing as much, as many goods coming into the country. Again, this is all related to what's going on with trade. Okay, so all right, enough on that. Let's go to the next thing. This is kind of the meat and potatoes of what I wanted to review with you today, which is ways that you can protect your downside. So there's the list that I have. Again, I think there's like 94 items on there. I'm striving to get to 100 just because it's a nice round number, but I'm up to 94. So it's in 10, the ideas are broken down into 10 different categories. Now, the first one here, financial, I made a note here. Make financial management a core discipline of your business. And so what I'm going to do, again, I'm not going to go through 94 ideas with you. I'm going to take 10 ideas from the first category, financial, and I'm going to go through those with you today. And the rest of them, like I said, we're going to email the list to you, and you can take a look at those at your leisure. If you have questions, you can reach out to me. I'm happy to discuss with you. Okay, so there's an old adage in the retail business. Actually, before I get to that, let me just say this. I've done workshops on what I call know your numbers, right? I think this is very important that companies entrepreneurs know the numbers of their business. You need to monitor your cash flow regularly and carefully. So, this is one of those things that a lot of people don't like to do. They might not be good at it, but I tell them, I said, it's essential that you do this, particularly in times like these. You've got to, keep your eye on the cash register, know what's coming in, know what's going out, be sure everyone's being honest. I mean, these are the things that you really want to focus on. Okay, so related to that, are you familiar with key performance indicators, KPIs they're called, right? This is the stuff you get out of your point of sale system. It'll tell you like what's selling, what time of the day is it selling, on what days of the week is it selling. You can get a lot of really good information out of there. And, so I would say, look at it on a regular basis. How often should you look at it? Well, some people look at them once a month or once a week. Others check them once a day. Some people, check them several times a day. It's up to you. The answer to the question is how often, should you review your KPIs? That depends on how often things are changing. Especially, things that you're changing. How often are you coming up with new ideas and trying out new ideas? You want to see if they're working, right? How often are customer preferences changing? These are the things that you want to see if they're working and see the impact of that. And again, looking at your KPIs, that's a good place to check and see if they're working. I can't tell you how many companies' books I look at, and they're an absolute mess. So mostly everybody uses QuickBooks, right? So if you're in QuickBooks, it has an automatic reconciliation feature. Make sure you reconcile. Don't just reconcile, in February or March before you go see your accountant. You're going to try to recognize the prior calendar year because it's not going to work. So, reconcile on a rate. What's regular basis? I don't know, weekly, at least monthly. I mean, don't let it go more than a month. And just make sure everything lines up properly because you're going to be reviewing these numbers on a regular basis. You want to make sure you got good numbers. Okay. It's very important that you do that. If you're not already using AI for data analysis, this is a great place to do it, to try it out. You can really gain some really good insights about your business. You feed your financial reports into a gen engine like ChatGPT, and you say, hey, tell me what you see here. Tell me what the story is. Ask anything you want. It's like having a conversation. If you and I were sitting across a table, and you're asking me questions about my business numbers, what would you ask? What would you want to know? It works the same way with generative AI, and it's an amazing tool. It's really powerful. And like I said, if you're not doing something like that, and if this is not something you're good at or you don't want to do, well, then ask ChatGPT to do it for you. And you'll get some interesting perspective. You should always check it because there's a thing called hallucination. Sometimes it sees things and makes stuff up. So you just want to make sure that it's accurate. But how will you know it's accurate? Well, This is where it goes back to the point I made, the number one point. You got to make sure you know your numbers. Okay, very important. Um, Prioritizing cash flow management. This is an area where a lot of businesses get into trouble. And some businesses receive full payment when a transaction is consummated. Think of a retailer. You go in, you buy a cup of coffee, you pay the retailer, you walk out, right? Many others receive maybe just a partial payment, or it's deferred until after the job is done. But look, here's the thing. You got to make sure you collect the rest of it in a timely manner. If your receivables, your accounts receivables are going past, say, 45 days, the odds of you collecting that money go down every day. And if you hit 90 days, I'm telling you right now, in most cases, you can kiss that money goodbye. You're probably not going to see it. All right. So, on the flip side, how timely are you paying your bills? For most folks, it's within 30 days, right? A lot of vendors have net 30 terms. You got to pay the bill within 30 days, if not immediately. A lot of people do that. So if you're paying your bills in, let's say, 30 days, and customers are paying you in, I don't know, pick a round number, 60, right? You're not an entrepreneur, you're a bank, okay, making interest-free loans, which is not a sustainable business model, folks. You don't want to be doing that. So again, these are the sort of things you need to pay attention to. Make sure that you have a good sense of what's owed to you, what you owe, all that kind of stuff. Okay. Let's see, what else do we have for you here? Okay, so you understand the difference between fixed and variable, discretionary, non-discretionary expenses. Like I'll give you, for instance, rent. If you have a lease, your rent is fixed, even though it might go up. Fixed meaning that it's not something that you can say, oh, I'm going to pay, instead of $10,000 a month for rent this month, I'm going to only pay $5,000. You can't do that. You've made a contractual commitment. You have to pay the $10,000 rent. And it's not really discretionary because you need a place to house your business. But if you can be lean and nimble, like a lot of businesses start out, they're working at home or they're working out of their garage or something like that. Even if you can move some of the operation to places like that, try to be as variable and discretionary as you possibly can. You want to be in control of as much of your spending as you possibly can. If you've made big commitments, you have equipment, you have loans and stuff, there's not really much you can do about those. Those commitments are not going to be within your discretion to change them. Okay. Let's see what else we have here. Consortium purchasing. Are you familiar with this? If you're part of like a industry association, if you're in the food service industry, like the Connecticut Restaurant Association, there's another group, Pan Gregorian. They basically, what they do is, as a small business, you can pool your purchasing with other small businesses, let's say in the food service industry, and you can get cost discounts, for buying in higher quantities, which is one of the things that makes it difficult for most small businesses to compete, because their costs are higher than larger companies because they're just not buying as much. So this is one area where you can potentially leverage that. So explore that. See if you can take advantage of that. Let's talk about financing. So do you presently have a working capital line of credit? If the answer is no, I do not, go get one. Okay. Now, what does that look like? You go to your bank and you say, hey, I need a working capital line of credit. Joe told me I need to get a working capital line of credit. Now, if you've been banking with them for a long time, hopefully they'll be accommodating. But if not, if you're a newer company or maybe your finances are not super secure, they might say, well, I can give you a credit card. Listen, if that's all they're willing to give you, take it, because it's something. You might need it down the road. So, I'd rather you have something than nothing. But ideally, hopefully you can get a commercial working capital line of credit. And it works just like a credit card. You can buy stuff on it, and as you draw down the balance, you pay it back. The amount of money that you have available to borrow goes up and down based on how much you pull out and how much you put back in. So it's a revolving working capital line of credit. So definitely try to get that if you can qualify for it. It's really good to have, because there might come a time where you're going to need some extra money, and or if you're going back to item number 5, if you have to front money to do a job or something like that, you're going to get paid on it in 30 to 60 days. Well, how are you going to bridge that gap? That's what the working capital line of credit helps you do. Now, I know a lot of people, they're debt averse. They're like, interest rates are high, they're going down. They're trying to time the market. They're playing the interest rate arbitrage game in many respects. And what I tell them is like, look, don't try to do that. Don't try to time the market. Look at what we call in the world of finance, positive leverage. And I'll just give you a real quick overview of what positive leverage is. Let's say you're borrowing money at 10% and you're working on a project that's going to return 20%. Well, the project's making you more than what the debt is costing you. That's positive leverage. Therefore, even though the debt's 10%, you say, oh, that's a high number. Doesn't matter because you're still making money. It's still worthwhile for you to take on that loan because you're going to do really positive things with it and you're going to make money from it. Listen, this is what private equity firms do all day long. Okay, so this is what the big money guys do. So be like them, be smart, and and play the same game. Last one is I know a number of people who their businesses kind of got in a little bit of a bind, and they've taken on some part-time work or even full-time work. They're still got the business running on the side or something like that, just to bring some money in. And hopefully you don't get into that situation, but if you do, then there's nothing wrong with you gotta keep your business afloat. You got to put food on the table. You do what you have to do, but I'm seeing a number of people who are either looking or have already done this. So again, that might be a sign of the times, but I'm just throwing it out there as an idea. Okay, so the next thing that we're going to talk about here, actually, this is coming up in a couple of slides, but you need to consider how much control you have over factors that go into, let's say, your KPIs, and we're going to talk about that in a little bit in a minute. But KPIs tell you like what's working and what's not. And if you roll out a new sales promotion, you want to see how effective it is, maybe a new social media post. I have a client who she has like a deli and she doesn't even have a website. She just takes pictures of what she's cooking for the day, puts it out on social media, and people come in and they say, yeah, I want the lasagna, I want the chicken parm or whatever. Those are the things that you can control, right? You can't control the economy, the changing sentiments or behaviors of customers. You can't control any of that. Maybe you can influence it a little bit with things like promotions, which you can control that. But again, there's not a whole lot as a small business that you can control. You can control your financial management. And again, that's why I chose this category to review 10 ideas, out of the 94, because this is what I want you to start to think about. What can you control? What is it that is in your control? Next, we're going to move to scenario planning. Okay, let's bring up the first point here. Do you do financial projections? If you go and apply for a loan, again, I work in lending, so we're always going to ask you for a projection. What has your business done in the past? Great, we can look at your P&L, your balance sheet, your cash flow statement. We can see all that, but we're interested in knowing what you think the business is going to do on a moving forward basis, because oftentimes you're borrowing money for the purpose of enhancing the business. And so it's like, okay, well, what does that look like? Let's sketch it out on paper. It's similar to like doing a budget. Do you do budgeting for your business? If you don't, you should. You should know like what your expected expenditures are going to be, both fixed and variable, discretionary, non-discretionary. Again, this is why I was saying before, watch those things, but do a budget and understand like where your money is going to go. And by the way, budget is usually just for the expenses. I would also do a budget for your revenue, what your expectations are for your revenue. And when you do all that, like I said, you've got a financial projection at that point. You can see, what your potential, revenues are, your expenses, even your capital costs, right? And as I said, predicting the future, this is what you're doing here. You're predicting the future, right? You're going to be wrong. We know you're going to be wrong, but try to minimize the margin of error and, document your assumptions and test your assumptions. I'm going to get into that in a little bit, but, but this is what I want you to do. It's like really sit down and really put some thought to what you think the future picture is going to look like. The other thing you can do is you can create different scenarios. You're going to have this set up on a spreadsheet, let's say. So you can do a best case scenario. You can look at a worst case, and then you can look at the most likely scenario. Test all three of those, right? See what happens if you change some of the assumptions. What does it do to the cash flow? Are you going from cash flow positive to cash flow negative? If you're going cash flow negative, how are you going to make it up? You're not like the federal government. You can't just go print your own money. Okay, so you've got to figure out where am I going to get that money from if I'm anticipating that there's going to be a shortfall. Now, again, we're not trying to predict the future, even though here we are. I mean, I get what you're saying, but we're trying to anticipate it. This is what I mean. We're testing different scenarios. We're not saying this is what we predict is going to happen. We're saying if this happens, we've got a plan. If that happens, we've got a plan. That's what we're doing here. So prepare for all the potentialities, right? And develop a flexible plan to achieve the future you want. Okay, playing off of what I said earlier. And listen, things are going to continue to change. We know that, right? So as your ecosystem changes, you got to update your plan as well. And then, of course, the last thing is having safety nets in place. I've mentioned the line of credit, cash reserves, goes without saying, but what do all these things do? They buy you time. And right now, I think that's important because, the time that it's going to take before we get out of where we are right now, that's going to be your biggest challenge. Okay, running out of time, running out of money is the second most popular reasons why small businesses, particularly newer businesses, fail. Okay, is that they run out of money. And what that means is they ran out of time. They were spending money and they weren't bringing enough in, et cetera. So you want to try to keep as much, cash in reserve. Like I said, have the line of credit. It's going to buy you time. All right, moving on to control. So let's talk about, what is it that you can control and what you can't control. You know, what you proactively do or don't do is what you can control, right? So, but relatively speaking, there's not much that you're in control of. Like I said, you can't control the economy, you can't control trades and tariffs and geopolitical tension. You can't control any of that, right? So you're kind of like I describe it as, particularly as a small business, you're like a leaf blowing in the wind. Where's the wind blowing today? That's which way you're going, right? Those are the things that you're not really able to do anything about, right? you know, what can't you control? Everything else that you can control, which again is not much, right? So pay the most attention to the things that you can control. There are things that you can react to, but you still have to be proactive by having a plan B ready to go. And as I said, prioritize what's most important, because if you try to do everything, you're not going to get anything done. So you have to prioritize what you feel is the most important things to do. Okay, let's see. I think we've got expanded time for questions and discussion because we're pretty much at the end here. So let me just say this. Just go back to what we said at the beginning of what we were going to be talking about. We talked about change. Why flexibility beats rigid planning. You got to be adaptable in this environment. We talked about tariffs. What do they mean for your business today? What it means is, if you're not already seeing it, your costs are probably going to be going up. And the other challenge that I'm seeing with some of my clients is getting stuff into the country from other countries is taking a lot longer. There's some clients that I work with, their stuff is still stuck overseas. They can't get it here. And by the way, every day that they're delayed, it seems like the tariffs are going up more and more. They're slapping more tariffs on more things and higher tariffs, and it's a losing battle. And again, you're not in control of any of that. You just have to be able to roll with it. We talked about some ways to protect cash flow and operations. There's a lot of ideas in the handout that we're going to send to you that you can refer to there. Scenario planning, like I said, prepare for multiple outcomes. Think of all the what if scenarios, and put yourself in a situation where you've thought about everything. You might not have a solution for everything, but if you've thought about it, hopefully the solution will come to you. And then finally, what we just discussed, focus on what it is that you can control and act on, what matters the most. Those are the things. Prioritize and what's most important to your business. Okay, so I think that is all for me. If if you need any help, this is a cheap plug for SCORE, but we have SCORE's got mentors who specialize in clients, who are going through these sort of things. And by the way, that there's a link on there that'll take you right to the Request a Mentor page on our website, which I had a hard time finding, by the way. So that was good that I put it there. And then we also have, Peter mentioned this at the outset, that we've got a really robust virtual library on these and other topics. So, refer to those. They're there for this purpose, and that is to help you figure things out. Between your own research and speaking with your mentor and everything, you'll be able to figure stuff out. It's not really that hard. And as I said, if you're not already using generative AI tools, you've heard of these: ChatGPT, Gemini, Claude. Every time you use Google now, you're using Gemini. I don't know if you noticed that or not. You ask a question in Google, and Gemini answers it for you. There was the webinar that I did a week ago with Jennifer DeRosa. I believe the number she said was that 60% of web searches now do not result in a click through to a website. which is amazing. Why don't they result in a click through to a website? Because the question's already been answered by Gemini. Gemini's already told the person what it was that they were looking for. So, being strategic in how you approach your marketing, go check out that webinar. She had some really great information in there about that. But again, the way generative AI works is you ask questions about a specific situation and it answers it for you. And then you can ask more questions, follow-up questions. You have like a conversation. You're having a conversation with a computer, and it's a really smart computer, by the way. Whoops, didn't want to click that, sorry. AI, in my opinion, this has created what, I consider to be oh, sorry, let me turn this off. Oh, I didn't want to do that. Hello, goodbye. Give me a second here, folks. Hit that by accident. All right, well, that's good because the link works. Okay, so again, AI has created what I call a strategic inflection point for all businesses. I don't care if you're a big business or you're a small business. And what I mean is that it has changed. Think of like when electronic spreadsheets first came out. I was back in college. There's a program, Lotus 123, that I discovered, and I thought it was the greatest thing in the world. And it revolutionized the way business was done, particularly in fields like accounting and finance and everything. This is where we're at, folks. We're at another point like that, where these tools that they're creating today, and they're only going to get better, it's changing the way business is done. You've heard about the disruption that it's likely to cause in the labor market, and maybe your own job if you're still commercially employed and you're not in business full time for yourself. It's going to change things, and so the sooner you adopt it and adapt to it, the better off that you're going to be. So one final thing on the Gen AI stuff. There's a free version and there's the paid version. And you've heard the old saying, you get what you pay for. It's true. You want to make sure that you're getting good advice. And so I would say I have the paid version. It costs $20 a month. If you can't afford $20 a month, you probably shouldn't be in business. So whether it's ChatGPT, Gemini, Claude, Copilot, whatever one you decide to use, you'd probably be best to get the paid version. And like I said, and just start using it. And you'll find that as you begin to use it, you're going to use it more and more. And you'll get to a point in time where you'll be like, I don't know how I ever got by without this. I'll give you, for instance, I ran some of the ideas for this presentation through ChatGPT. I didn't use any of the information verbatim, but it helped to shape my thinking. As I was thinking about things, I was running it by ChatGPT. What do you think of this? What do you think of that? Should I talk about this, that? That's what I use it for. And, so if you like this presentation, I'll take credit for it, but ChatGPT helped me with it. They're like my partner. Okay. So, again, if you're not already there, you should definitely get there. And that is all I have. And we've got a good amount of time here for questions. So Peter, oh, by the way, if you want, I told you I would give you the link. If you want to reach me, if you want to talk about any of these stuff, if we don't get to all your questions today, you can reach me. Again, everybody's going to get the link to this slide deck. So here's how you can reach me. And there's the address for the podcast and the ChatGPT analysis if you want to check that out. So it's all there, and feel free to go there. Okay, so let's take any questions. What do we have, Peter? Anything?
So thank you very, very much, Joe, for the very comprehensive presentation. We do not have any questions in the Q&A box, but let's use the chat. Maybe that's easier.
Okay.
This is a great opportunity to ask Joe questions about anything that is related to your business and anything that he said today. So we'll kind of ask you guys to put some questions into the chat, and we'll take them. So we'll give you guys a couple of moments to build the questions into the chat.
Yeah, I thought there would be some at least, because I'm only touching on some topics here in a fairly light manner, but there's a whole lot more that we could talk about here, today. As I said, even some of the other ideas and everything, you can read them. They're self-explanatory, I think, for the most part. But again, if they're not, feel free to reach out. I'm happy to talk with anybody.
While we're waiting, I think you talked about the top 10. Can you identify 11 and 12 just while we wait for people to put their questions in?
I could. Let me just see here. I'd have to switch out of where I am. 11. Well, I mean, they're not in any particular. There's 32 questions, or not questions, ideas in the financial section. I told you I had 10 sections. I gave you 10. I mean, here's no. Another one, increase cash reserves and liquid investments. Okay, yeah, that's pretty, standard. Make revenue more recurring. So try to, convert some clients to subscriptions, memberships, loyalty programs, maintenance plans on products like, your HVAC guy trying to sell you the maintenance plan. Well, in some cases it probably makes sense to have that. Cost economization, comparative shopping, these are the sort of things that you're probably already doing. But I was talking with one of my food service clients recently, and he has like three different food suppliers that he uses to buy, like, let's say something like chicken, right? And so what he does is every time he has to buy more chicken, which he buys a couple of times a week, he goes on three different websites and he checks the price of what everybody's selling chicken for. And whoever has the lowest price, that's who he buys from. Because in his business, particularly a business like food service, you see the prices at restaurants have gone up a lot, and delis and things like that. Everybody's noticed that, I'm sure. And you're probably thinking, oh, these guys are making a killing. They're not. The reason why those costs are going up is because their costs are going up. In fact, they're probably going up even more than what they're charging you. And if they don't do comparative shopping, in many cases, they're not going to make any money. They're going to make nothing. They'll be losing money if they don't do those sort of things. So having a sharp pencil in certain industries like food, which is a very popular business category, super important to do that in those types of businesses, and any type of business. But some are more sensitive than others, and that's a good example of a very sensitive, cost economization type business.
The question that's going to come in. So let me ask the first question that's come in. You mentioned a couple of examples of tasks that small businesses could try using AI tools to help them with. Would you provide a few more examples and some of your favorite tools?
Again, my favorite tool is ChatGPT only because that's the one I pay for. Actually, I don't pay for it. My company does. So that's the one that I use. I've used the other ones, and what's kind of fun to do sometimes is you ask the same question. You give each engine the same data, and you ask it the same question, and compare what answers they give you. That's fun to do, because sometimes they don't give you the same answer. One might be more insightful than the others. To go back to the question, what sort of things can you use it for? I'll give you. I mean, I can come up with some ideas, but I'll just tell you. Matt Krieger, who is one of our SCORE mentors, he did a webinar on AI. It was probably, Peter, you remember what it was? It was at least 6 months ago, maybe not quite
about
a
6
year.
months ago, but it's easy to find on the SCORE website.
Yeah, you can find it. It is fabulous. He went through like 15 or 20 different ways that you can use, AI. And one that I remember was he took a picture of like boxes that he had in inventory, and you can see like all the labels on them and everything like that. And then he asked ChatGPT to create a Excel spreadsheet with his inventory, and by golly, it did it. I mean, just amazing stuff like that. You could take a picture. You can go to the supermarket and take a picture of the toothpaste aisle. How many different brands and types of toothpaste are there? There's like 1,000, right? And you could say, I'm looking for the Colgate Extra Whitening Gel. And it'll say, it's on the third shelf, about 2 feet in from the left. And bam, there it is. I mean, just stuff like that you could incorporate into your daily life, and not even just your business life. But, so what I use it for in business is, like I said, I use it for analyzing companies' financial statements. I use it for doing the article analysis. I use it for when I'm developing new presentations to make sure that I've got all the content in there that I want. Of course, Google with Gemini, I'm asking questions all the time. There isn't a day that goes by that I don't use it. And, but like I said, go check out Matt's webinar. It was just fabulous, of all the different, you'll just be blown away. It was really that good. And so I would definitely say check that out.
Our next question is, what are your thoughts on acceptable gross margins to know whether the business is likely to be long-term successful, recognizing margin varies dramatically by industry?
It does, yeah. I mean, I guess the margin is like, what that's your, is it, is that your gross profit margin or your net margin? There's a difference. Gross margin is after you pay for your cost of goods sold. Cost of goods sold, you want to make sure that you've got a decent margin to pay your expenses. Well, if your expenses include, say, a paycheck for the owner, and you still have a net margin, well, then that's a good thing because that means that you're making a return on your investment. Keep in mind, folks, as a business owner, you should be taking home 2 checks every week or every other week, however it is you pay yourself. You should be taking home a paycheck for the amount of time that you're working in the business, and that's commensurate with what you would say, hire a manager or something to do whatever it is that you're doing. You collect 1 check for that, and then the other check is there should be some sort of a dividend or some sort of net money that's left over in the business, which compensates you for the money that you put into the business way back when. And that's the other part of the equation is you got to get paid both. If you're not, then it's like you should have taken that money and put it into Apple stock or something like that. So keep in mind, you should be expecting 2 paychecks. And I know it doesn't happen every week. Sometimes you don't even get a paycheck. You got to make payroll and you've got to wait to get paid. I know that happens, right? But in the end, you look at it at year end. It's like, did I make an appropriate salary? Hopefully, yes. And did I make a return on my investment? And if not, some people might say, well, I don't care about that because I love what I do and I want to continue to do this. Okay, fine, but you realize that you're giving that up. And ultimately, your final, reward is going to come when you sell your business. And hopefully, your business is worth something in the end that you can sell it and cash out. And maybe that's when your final dividend comes, right? That's your return of your investment and hopefully a return on your investment. But don't lose sight of that. Those are 2 important things to keep in mind is that that's what your expectation should be as an entrepreneur, because you could go get a job tomorrow doing what you're doing and get a paycheck and take your excess money and put it into the stock market, buy the S&P 500 or whatever, and get a dividend. Why would you expect anything less? You should expect something more because you're taking the risk of running a business. So again, keep that in mind. That's very important. I talk with a lot of people and they lose sight of that. And I think you really need to keep that in perspective. Did I answer the question? I think I did.
I think you did. Next question, we've got about a little under 5 minutes. Any general advice on marketing survival skills for a new business? My business idea requires that I start small and the cost of entry is low enough that I can afford it. But seasoned businesses in this industry are among some of the largest players in the market.
I would say in that case, and this applies to many of my clients, is whatever it is that you're selling, whatever service or product that it is you're selling, try not to be a commodity. And what I mean is a commodity is something that you buy strictly because of the price. I need a cup of coffee, so I'm going to go to Starbucks or Dunkin' Donuts or wherever, and I'm going to buy a cup of coffee. And if Dunkin' Donuts is $1 cheaper and I don't mind the flavor difference, I'm going to go buy that product because I save $1. You don't want to try to be the low cost provider. So in many cases, what I say to people is, don't make your business transactional where someone comes in, like I said, a cup of coffee and they pre-ordered on the app and they just come in and they pick it up off a shelf. You never have any contact with them. Have a relationship oriented business where you know your clients. Some of the more successful clients that I work with, they know their customers. Their customers come in, they know them by name. They know what they want. In a restaurant situation, they know what their favorite drink is when they come in. It's already waiting for them on the table. That sort of stuff. Those are the things that are meaningful to people. It isn't just all about price. So keep that in mind. It's like you want to be different, and you can't compete on price in many cases anyway, because like I said, you're not buying in large enough quantities. But let there be other reasons for why people come and do business with you. It's because they like you, they trust you. A liquor store is another good example. You can go to any liquor store, and if you know what you want to buy, one is a little bit cheaper than the other. Well, obviously you would go buy it there. But if you need a recommendation from somebody who you trust, and someone who has good taste and knows what you like, and that's why you go there. That's why you're going to buy from that merchant, is because of the other things it's not just about the price. The restaurant who welcomes you when you come in, makes you feel like $1 million. That's meaningful to you. You don't mind paying. You're not looking at the menu, the prices on the menu as much, because those things are of value to you. So understand what your customers value and play to that. Understand that and play, build your business model around that.
Thank you very, very much, Joe. Excellent questions. We've gone through the questions, so let's bring our webinar to a close. As a reminder, a recording of this webinar and any materials will be available within a couple of days on the fairfieldcounty.score.org website. Please check out that website for information on upcoming webinars. We run many webinars every month. We also offer free individual counseling, so please use the link on the screen or visit our website and click Request a Mentor. We are available for sessions via phone, email, or video. You will get an evaluation at the end of this call. Please fill it out so we can do a better job making these webinars useful for you in the future. On behalf of SCORE, I'd like to thank you for attending today's SCORE Live webinar. And in closing, a big thank you, Joe, for your hard work in putting this together. Very, very helpful. And that will close out our meeting. Have a great day, everyone.
Thanks, everyone.
Bye-bye.